Good morning, traders. It is Thursday, September 19th, and we have a new all-time market high. So I thought I would do a special video. We'll go through all the different types of setups that we're currently seeing, why this breakout looks good, what were we looking at before the open, how did this play out, how should you have been structuring your trades. I really think you're going to learn a lot from this presentation. Before I get started, please hit the thumbs up. It's going to help my algorithms. It's going to help me reach more people. I'd really appreciate it if you do that. So let's take a look at the price action before the market had even opened up. This is the previous all-time high. We had lots of choppy price action yesterday post FOMC statement. We got a 50 basis point rate cut from the Fed. It's really a little puzzling that the market didn't react in a more bullish fashion. But you can see overnight the S&P futures were up almost 100 points, just blew through the previous all-time high. That's great. That's exactly how we want to see these breakouts. And we're going to get into the characteristics of the breakout that told me that, yes, we're likely to see some follow-through buying here. So in any event, we've got this big gap up, but we don't want to chase that move higher. So what do? Well, in my pre-open market comments, this is what I had posted to everyone in the chat room. So again, this is before the market had opened up. So the factors that were in play right now are that, yes, the Fed yesterday in their statement, they cut by more than really expected. There was a 60% chance that we could see a 50 basis point rate cut. I wasn't expecting it. I don't think most people were expecting it. And all of a sudden you get the fear that, what does the Fed see that we don't see? Is there some kind of economic weakness that's happening behind the scenes that's prompting them to make a bigger than expected rate cut? No, based on Powell's statement, in fact, it was quite the opposite. They see stable market conditions and they want to be proactive. They do not want to wait for jobs to start deteriorating. We want to make sure that we have nice, strong employment. That's one of their mandates. And they've been seeing inflation ease. So they're trying to get inflation to ease while preserving job growth. And they feel that right now there's a really good balance for that. So this is good news for the market. We have not seen a lot of economic weakness. In fact, this morning, initial jobless claims came in at 219,000. That's a good number. We also had Chicago PMI came out. That was better than expected. So the economic data points, ISM manufacturing, the Beige Book, everything has been nice and solid here. This is the best case scenario for the market. So you've got decent, stable economic growth, no credit concerns, market at an all-time high, and you get a 50 basis point rate cut. So how do we trade this? Well, what I had mentioned earlier today was this move is going to be overextended. Why? And how do I know that? Well, this is triple witching. So we have lots and lots of institutions who have exposure to options that are going to be expiring this Friday, futures contracts. This is September, so those are going to be rolling off and they're going to be exiting the September positions, taking December positions. There's a lot of activity that happens during the week of a triple witch. And so any big overnight move like that was going to be exaggerated because they have to adjust instantly. So the instructions that I provided were wait to see how much of this pullback we get and know that we are going to find support. It's very unlikely that we're going to see stacked red candles and a complete reversal of these early gains. How could I be so confident? What's different about this time? Pete, you've told us previously that gaps up to a new all-time high tend to reverse. And that's very true. But this is different. and let's take a look at the daily chart. And here you can see that, yes, if we had a market that was running higher and trending higher, and then all of a sudden we had a nice big gap up when we've got a market that's been doing this or been doing this, yes, that gap up after an already big move is going to attract profit taking. If you're anxious to sell here and here and here, you're not going to let this opportunity pass you by because you've got a nice big gap up to a new all-time high. Blam! That's where you see the profit taking. Again, a nice stretch with a big market run up and then another big gap up. Yes, that is where we can expect to see these big gap reversals. That's not what we had here. What we had here was a cup and handle formation. So the market pulled back considerably in August, rallied back. Okay, this was the juncture where we're looking to see if there was additional selling pressure. Had we seen it, then we would have known that the next leg lower was coming and that the 200-day moving average would be challenged. So this tempers our bearishness. Blam! We get another nice big sell-off. Okay, maybe this is a double top that we're getting in here. Let's see if we get follow-through in here. We didn't. In fact, that long red candle was easily erased 2 weeks ago, and we continued to float higher. Another bullish sign, and here's what we have. We have a giant cup and handle formation, okay? The distance of that drop, this is about half of it. That's a cup and handle formation. So my point is that we weren't doing this to get us to a new all-time high. We didn't have this strong trend strength. No, we had a cup and handle with a firm horizontal resistance level, and boom, we blew through that. That is a much different scenario. And when we do get these big gaps up, they tend to be preserved. So we've got really good news fundamentally. We've got the Fed cutting interest rates. We've got a really good technical backdrop here. So when we go into the 5-minute chart, we're starting to look for opportunities to get long. How deep is this dip going to be? Where can we get long? And so we found support here. And if you look at my pre-open market comments, this is exactly what I suggested that all of you do. Move's going to be a little bit exaggerated on the open. We're going to see a little bit of a drop. If we get a gap and go out of this, you have to be 100% fine with letting it go. Let it run. There are going to be opportunities to get long, so you don't have to FOMO into this move. If we do get this drop, this little dip, we'd like to see the high before the Fed, which is about 566 or so. We saw that on Tuesday. We'd like to see that preserved. Well, it was preserved in a big way. We never got close to it. Excellent. That's what we want to see there as well. So now we start to get this little lift off here. This is where you start taking starter long positions. You don't have to load up. Start taking your starter long positions in here. We've got the dip that we were waiting for. And here's the tactic that all of you should use. So take every stock that you love and set these 2 alerts. This is how you're going to trade the open. You set an alert for greater than VWAP, and you do it on all the stocks you like. And then the second one that you set is show me a buy signal on an M5 basis for all of these stocks. Well, what's going to happen? These stocks are going to open very, very strong. They're going to be above VWAP. Okay, so we're waiting for them to go below VWAP, and our servers will know that the stock is above VWAP. We want the stock to fall below VWAP, and then we want it to rally back above VWAP, and then we're going to get our alert. Okay, so then we can evaluate the depth and magnitude of that dip, and it provides us with an excellent entry point because as we're crossing VWAP, now we have a natural stop level that's very, very close to our entry price. The other scenario would be that the market has a little bit more of a prolonged dip. Okay, it pulls in a little bit longer, maybe it takes an hour or so, and in that event, you're going to have stocks are going to open on a buy signal M5. The strongest ones absolutely are going to do that. So the system's going to get them into an exit signal, and then when it flips back to a buy signal, you'll be able to evaluate that buy signal and see exactly what the stock did during that time frame. You want the dips to be brief and shallow, but that is going to provide you with an excellent entry point. That's the strategy that I tried to get all of you to use. So we're going to take this off, and as we go through the morning, I'm showing my comments here. Let the market come in. Focus on the long side. Let the market come in. Focus on the long side. Let the market come in. Focus on the long side. I am trying to hammer this point home, okay? So there are going to be some people out here who think, oh, this is going to be a great gap reversal. I'm going to make a killing on this. Look, we have 3 red candles on the open. I had mentioned to you earlier, that's a mindset that you would have if the market had been trending higher for many, many days, for a week. Okay, things are getting a little bit frothy. Yeah, absolutely, then you would have that mindset, but that is not what we had this time around. We had a cup and handle formation. We had big news from the Fed, okay? So all of these influences are going to lend support to the market. So I wanted to make sure that I discourage that line of thinking in here. And the way that you can discourage yourself from going into that bad place is, let's say that this turns out to be a big bearish gap reversal. Blam, 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 blam. Long red candles, they smack this thing down into oblivion. You missed that move. Don't worry about it, because if this thing gets hammered down in that fashion, then this breakout right here, you're going to get a long red bearish engulfing candle. And you are going to have lots and lots and lots of opportunities to get short as this market rolls over and starts to weaken and breach one technical support level after the other. So that mindset that you're going to be able to catch a move if this is a head fake reversal, head fake breakout to the upside that reverses, if that were to materialize, you're going to have lots of time to get short in the next week, 2 weeks, 3 weeks. But for right now, everything is telling us that you want to be long this market. Okay, so that is the mindset that we're in. So let's go to phase 2. Phase 2 is, what would have happened if I would have set those dang alerts that Pete told me about? Would it have worked? Well, let's go into one of our searches. I'm just going to go into Green Royal Flush, and I'm going to show you how easy it is to set these alerts. So all of these stocks are currently on buy signals. All I have to do, and this is a very, very strong list of stocks. These are your leaders. So what I would do is right click, create alert. I'm going to go down to VWAP, and I'm going to select that and alert me when the stock is above VWAP. As I mentioned earlier, the servers know that if the stock is currently above VWAP, it's going to wait for the stock to close below VWAP and then back above VWAP. There's no other action required by you. If it's not just going to take this and drop a bunch of alert signals on you because it's currently above VWAP, it knows better than that. We've built that logic in. So that's what you would save. Right click on the column headers, create alert, and you can do the exact same thing for the trade signals on an M5 basis. Buy, trade signal, M5, set it, and forget it. You just did it for all of those stocks. So again, the server knows that it's currently on a buy signal. It knows that it has to go to an exit signal. It knows that then it needs to go on a buy signal, and then you start getting your alerts. You can see all of them by just going into the alerts and bringing up the alert console and the alert history. So very easy for you to track which alerts have been triggered and then to be able to click through those charts, because you're going to be getting a lot of pop-up windows. So let's go through this list. I'm not cherry picking. All I'm doing is I'm showing you how this would have worked. Okay, I'm going to go through each one of these stocks. So I'm going to go into an M5 basis, and we're going to be looking, let's zoom in just a little bit, and we'll go into Netflix. Okay, closes above VWAP, closes below VWAP, closes above VWAP. Hey, what did the stock do? Well, it didn't make a massive gap up. Would that have been a good entry point? Yes, it would have been. Go into Meta. Would Meta have been a good entry point? Closed above VWAP, closed below VWAP, closed above VWAP. There is my entry point. Actually coincides with a buy signal, okay? Market pulls back pretty hard. Stock holds its own. Crowd. Below VWAP, closes above VWAP. Ooh, this thing barely even pulled back. There is your, actually, it was on an exit signal. The server's going to know that. So it's just going to wait for the buy signal, and there you get your buy signal in there. So that worked. Caterpillar, below, above. Barely pulled back. Not too outrageous of a gap up. And again, we know that this stock is on a D1 buy signal. It's on a D1, an H1. It's on every dang trade signal that you can get. So we know that the stock looks good from a D1 standpoint. We don't have to do all that research, okay? It's already kind of pre-made for us. So I'm just going to go through the list. Below, above. Okay, so let's just look at this. You're below, you're above. You enter here. You've got your stop at VWAP. Market's starting to roll over a little bit here. We got a bearish 1OP cycle. Okay, maybe we got to be a little bit careful here, because the market is starting to roll over from this high, and we've got a bearish cycle. So you put your stop here, but you're still going to be exiting at a higher level than when you entered. So that's what we want to do. We want to provide ourselves with good entry points. We want to keep our losses small. We want to let our winners run. This strategy would put you in that position. CVNA. So you're going to get your alert right in here. Well, depending on when you set it, if you did it right on the open, you would get it right in here. Stock's still kind of waffling around. Would I have taken this one? Personally, I wouldn't have, because you're not through the prior day's high. Once you get through that prior day's high, once you get the alert, click, yeah, I would click there or click here and set a horizontal alert line so that I know when that high of the day has been breached. And so just because you get an alert doesn't mean you have to act on it right away. Dash, this is pretty nice. Okay, you're in here. Maybe you're getting ready to stop out if this VWAP is breached. ARM. All I'm doing is going through the list. Never triggered. Okay, so above VWAP, below VWAP, never triggered. You're still waiting. Okay, here we're good. Yeah, these are all good entry points. They're all good entry points. Here, you got a long green candle, VRT. Haven't looked at the D1 chart. So you get this long green candle. We never take trades on long candles. We need to evaluate. We need to see what they do. This one reverses half of it right away. So you're still kind of in wait and see mode. Click, click, high of the day. No need to spend any more time on it. Let's see if it can get through the high of the day. If it does, I'm going to get that alert, but I don't have to panic into that position. All right, so here we got Amazon. All right, stock pulls back. Good entry point. Yeah, not bad. We get a little buy signal in here. Uh-oh, now we're starting to reverse. So if I'm long in here on VWAP, now I'm thinking, yeah, maybe I should take some gains on this. Zillow gets up, continuing to float higher. Looks pretty dang good. We'd want to see it through the prior day's high. That one right there. Okay, so let's make sure that we clear that. You do clear it here. I wouldn't like that long red candle right in there, but rebounds, holds VWAP, continues higher. So I'd be tenuously hanging on to that. And you can also see that the market has been kind of tenuously hanging on to these gains as well. D-Dog, okay? The point is you've got some pretty initial buffer, some cushion on these trades, and it's critical that you have a good entry point, because that entry point is going to perform right away. When you have cushion in the trade, that means that the stock, you can put your stop at your entry price, and now your worst case scenario is that you scratch. Your best case scenario is that you get a nice runner like this, and now you can really let your profits run. Keep your losses small, let your winners run. Isn't that what we always hear? Isn't that like the number one trading mantra? Well, that's what this approach allows you to do. So I'm just going to click through the rest, and I'm going to talk a little bit about the trade signals, and you can see how this strategy would have provided you with an excellent entry point. And these stocks we already know never triggered. So you're still waiting. It's just such an easy methodology to use. Okay, what about Nike? Nike, you would have triggered, you would have been long up here, you would have lost money on it. Well, first of all, you've got this bearish engulfing candle that instantly erases these gains. Okay, so am I going to buy here before the stock has made a new high of the day? I'm not going to. I don't think you should either, especially if you get a reversing candle like that, because this is nice. Every stock rallied with the market, and then it got smacked down right away. Well, now it can't even close above that high of the day yet. So no, I'm going to monitor, and now I get this nice little rally in the market, but the stock can't make a new high here. I would not be buying that one. I wouldn't. Disney. You gonna buy that when the market's making a new high of the day and this is making a lower high? Are you gonna buy that breakout? No. You're gonna get the alert. You're gonna say, forget it. I have no interest in this. I could click, set a high of day alert, but I'm already not interested in that. I'm not interested in that. This is interesting to me because now I've taken out the high and I'm continuing to float higher. That looks like a good prospect. Your D1 analysis should also come into play. Long red candle, market moving higher, stock not able to recapture that high. No go, you're not taking that trade, not able to recapture the high when the market's making a new high. No. Okay, long red candles. Yeah, not going to be overly excited. This is not the one for me. Okay, this is a nice little move in here, but look at that big selling right out of the open. I don't like to see smackdowns like that. So as I go through the list, there are a number of stocks that look attractive to me. I always like to give you V or W above VWAP. Okay, let's take a look at that. I'm not interested in this. Okay, this is not that compelling to me. I've got lots of mixed overlapping candles. I've got a stock that's just poked through that VWAP in here. Okay, so the alert was set and triggered. Now what do I do with that? Click end of day. Click the high of the day. Okay, if the stock can get through that, then I'm interested in it. Let's look at the D1 chart. Oh, that must have been the alert right there. I might have had one on VWAP, but I probably have one on the 200-day moving average, which is touched, but the stock has not been able to get through it. Right click, create alert, SMA, scroll down. When it's above the 200-day moving average, let me know about it. I'd be interested there. Okay, not particularly interested here. This is how we set our alerts. This is how easy it can be for you. And when you get a big market move like we had today, it's a great strategy to use. Let's talk a little bit about the trade signals. Oh yeah, I was going to hook you up with a long that I like. So let's take a look at the charts. I like this Netflix chart. This is good. Had a pretty big decline yesterday after the FOMC statement, but it's making a nice breakout here. I'm going to find one that I really like off this list. I like Meta. That is a nice, solid breakout. Cup and handle. Meta is your long. I will be doing a Sunday video as well. I like this compression breakout. I like the price action that I'm seeing on Meta today. Look at it grind, grind, grind higher. Very, very nice. So let's talk a little bit about the trade signals and how to use them. So the trade signals are like any other variable in one sense, but they are your best variable. What does that mean? It means that this is your cornerstone. And, you know, we've had a lot of conversation about, are the trade signals good? Are the trade signals bad? Oh, look, this would have been a loser if you got in there. Oh, look, this would have been a loser if you got in there. I've put together an article that has all the ins and outs of how to trade the signals. And one of the things that we don't do is we do not trade compressions. When the stock is sideways, in and out and in and out, I don't care what indicator you use. It's going to be worthless when the stock is chopping back and forth within a compression. Okay, so the trade signals are no different in that regard. But where they are different is that they are dynamic. So when you look at all the other different types of indicators that are available to you, most of them are oscillators of some type or nature. So they all perform within a specific boundary. The trade signals, on the other hand, are very dynamic, meaning that when there is a move that's taking place, you could use EMA as an example, okay? I like 3/8 EMA crossovers. Well, you get those crossovers all the dang time. Even when a stock is in a strong uptrend, you're going to see the 3 move below the 8. Oh, that's a sell signal. That's an exit signal. Oh, whoop, there it goes. Now it's back above it. Now it's a buy signal. You're in, you're out. You're in, you're out. You're in, you're out. You're missing the big moves where the trade signals, they keep you in the trade for a very, very long time. And they also are very good at picking those reversals and those inflection points. So I'm just going to, APP was a stock that I highlighted in my video Sunday. Wow, that has been a really nice one. And so I'm going to put up a H1 chart. I know we've been tracking it. So I want to use this as an example. So here you've got a really nice, strong move higher. And you can see how the signal has stuck with the position. I'm going to put up LRSI, which I like the indicator. It's a really good indicator. And this is certainly something that you can use in all of your searches. But even during this big run up here, you would have seen, no, it's going to get you out of the trade in here when the stock drops below 80 or the reading drops below 80. That's how you would trade it. And you would see the same thing during a big decline in the stock also, where you're head faked out, head faked out, head faked out, head faked out, and it doesn't really measure the magnitude of a big move or keep you in a big move like this because it's constantly oscillating back and forth. The same thing is true with relative strength, real relative strength. Unbelievably great variable for us to use. But when you have a big move in the underlying stock, the stock can't often preserve that relative strength, and you'll see periods of weakness. So if you were just trading relative strength and relative weakness, you would see in and out and in and out and in and out. Well, you don't get that type of variance in these trade signals, and that's why they're so powerful. They're also really powerful to use as a search criteria because you can search for these signals to agree across multiple time frames. And there's a lot of power in that. So if you had a H1 buy signal in here, and so let's say that you just search for H1 stocks, and we can do this. It's a good exercise for us to go through. Let's do this. Let's create a custom search. And I'll be able to demonstrate how these signals work. And I also want to encourage you to use these trade signals as your cornerstone for your searches, but think about how you can use them in conjunction with other variables. Okay, so if you get an H1 trade signal, buy signal, and the stock has been able to break above a major moving average today, that's going to be a lot more legitimate. Your odds of success are going to be much higher. What if it had heavy volume? Hey, those would be really powerful. Checkbox, 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 checkbox. My odds of success continue to go up. So let's do that. H1, okay? H1 buy signal, SMA cross today. Let's make sure we got some good option liquidity. And this is only one example out of many that you can be using. Relative volume today, let's go to 120%. And do we need to do anything else? I'm going to go no ETFs. This is going to be a pretty dang good search. These are going to be great stocks, okay? I can already tell you, you got good volume, good option liquidity. So with all of these characteristics, now you know, even on a daily basis, these are going to be excellent candidates. So maybe the trades don't set up today, but with all of these things lining up in the course of the next day, 2 days, 3 days, I guarantee you these stocks are going to be rock solid, good, 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 good. Okay? They're going to be good. So now I have my list of stocks that I like on a longer term basis. Now what I want to do is I want to zero in and I want to trade those shorter time frames. So let's take a look at the first stock on the list is Apple. Airbnb was the stock that I showed yesterday in the chat room. So here is the 1 hour chart of Apple. We can see that we've got a nice big breakout here through a technical resistance level. Let's go into the daily chart. Oh yeah, look at that nice breakout for Apple. Oh, but Pete, you're on a D1 sell signal. That sell signal is going to be much harder to turn than an H1 time frame. And yes, we like these to agree. It's nice when you got a D1 agreeing with an H1 for a longer term swing trade. Most of us are very short term traders, so getting that H1 to flip, in fact, when I have a sell signal like that I've taken on a D1 basis, and I get an H1 contra signal, meaning D1 sell, H1 buy, I use that H1 as your exit point. So that's how you keep it's more sensitive, that's how you keep your losses small. So we've got a bit of a downward sloping trend line here that was breached yesterday. We're above AVWAP-E. Today we're above the 50-day moving average. We've got a lot of really good looking things happening for Apple right now. Would I like to get above that downward sloping trend line? You bet. I'm going to just take these down. I'm getting trade signals and I don't want to disrupt my train of thought or yours. So Apple M5, let's take a look at it. So nice, steady price action higher, resting on VWAP. Would this be a good entry point? Market starting to find some support here. We want to see a benign bearish cycle. We do not want to see the market pull back much more below VWAP here, okay? So we want this entire cycle to run with the market staying pretty close to the high of the day. Then we can be confident that when the market crosses back up, the indicator crosses back up, that the market's going to start grinding higher and make a new high of the day. So with this support right in here, the SPY staying above VWAP, Apple having nice, consistent candles to the upside. This is just a normal retracement with support at VWAP. Yeah, I would take a position in Apple right now. It's not too far out of the gate. It's above the 50-day moving average on D1, and I know that because I just saw it on the chart and I ran this search. Was below the 50-day moving average yesterday. Today it's above the 50-day moving average. Could have been below the 100-day moving average yesterday. Today it's above the 100-day moving average. So the 50, 100, 200-day, those are all really good search variables to include. Yeah, this is a great entry point, and I can keep my stop very, very tight. So what would I want to do with Apple 2, 3, 4 days from now? Right click, create alert, trade signal, M5, buy signal, add it, let me know. Well, Pete, it's already on a buy signal. Yes, it is. So that means it's going to have to go to an exit signal and then flip back to a buy signal. And when I see that, I'm going to evaluate whatever dip has taken place, whatever compression has taken place, as long as the stock has preserved its relative strength. That new buy signal is going to provide me with an opportunity to enter a day trade or perhaps to add to a swing position that I might have on. That's how you use the signals. So you're keying off of the longer time frames and you're simply looking for those shorter time frames. So now you're in and out based on your longer term analysis. So let's see. And I wish I could find a few other good stocks. Maybe I'll be able to find them. But, you know, the same thing was true. Go into the H1, and I can look at tons of stocks that have recently broken out. I've got a couple in mind. I'm going to go to the last couple of stocks that I've highlighted. We'll take a look at those. So APP was your pick from Sunday. So you get your H1 buy signal here. You've got your breakout. You've got everything that I've talked about, okay? So now you're drilling down and you're looking for how do I find those shorter term opportunities, okay? I'm looking for the buy signal. I'm setting my alerts for the buy signal. That's how I'm going to trade this, okay? So that's a good entry point. That's a good exit. Again, I had mentioned this being dynamic. When you get a move like that all along the way, look, relative weakness, oh, exit, relative strength, get in, relative weakness, get out, back and forth, in and out. That's not what the trade signals do. When they're on, they are on, and they are like a pit bull. But when it's time to get out, they also get you out. Very dynamic. There's no other variable that you have to pick from that does this. So you enter here, exit here, you enter here, you exit here. If you're trading M5, if you're trading M15, it's probably just got you in the trade and kept you in the trade. Yes, it did. Because it's not going to be as sensitive. All right, so you could even just trade the M15 and then watch for those M5 exit signals and go to the sideline, as I've pointed out, just to take profits if you're nervous. If you're a nervous trader and you've got nice gains, ride it as long as you can, and this is even going to keep you in the trade longer than you might otherwise be, but you can use that strategy of M15 and M5. Use the trade signals across multiple time frames. GE is a stock that I highlighted yesterday in the live event. I like GE, okay? GE, H1. Really nice buy signal in here. But do I buy it right here? Probably not. I've got to at least get through some technical resistance levels. Okay, so there's a nice breakout through a horizontal resistance level. Do I buy it in here? Depends on the trader. Maybe. I mean, you could nibble in here. It was still in a compression. If it gets above here, yeah, then I would really be interested. So that was on SEP 13. So let's go into a 5-minute chart and let's take a look at September 13. September 13. Breaking through horizontal resistance now on an M5 buy signal. Yeah, baby, I'm going to ride that thing to that exit point. Get back in here. Okay, this is probably a scratch, to be fair. That's okay. Scratches are fine. I'm not losing money. All right, here, yeah, that's probably a tiny little loser in here, okay? Nothing in comparison to the money that you've made here. There's another nice entry point. Hey, that was a nice winner from here to here, okay? They had some decent gains in there. Again, it's really going to be dependent upon your time frame. You know, if you're going to go longer time frames, it's going to be stickier and it's going to keep you in the trade longer. So this is how you use the trade signals. And if I had to kind of make an analogy, I've provided you with the education, I've provided you with the tools, I've provided you with the trade signals, I've provided you with the kitchen, everything that you need to create a masterpiece. You have all the ingredients before you. Now you have to take those ingredients and figure out how you put them together, because everybody has their own taste preferences. So everybody's going to have their own different recipes that they create. You're going to have your own risk tolerance. So what works for me is not going to work for everybody else. And some of this is just flat out plain effort on your part. It's experimentation. It's knowing what these variables represent and then understanding the types of stocks that you like to find. Because I'll tell you flat out, custom search will find anything, be it earnings, implied volatility of the options, the historical volatility of the stock. It could be breaking through major moving averages. It could be breaking through our trend lines, our automated trend lines, IV spikes, eliminating ETFs, LRSI, relative strength, big volume spikes. You look at everything here. Stocks that are making a new 20-day high. Let's run that one. Gee, I wonder if that would be a good one. Now, of course, there are going to be a lot of stocks that are making a new 20-day high. And so In that particular case, you'd have to be pretty guarded on a day like today. But let's say that you ran that a week ago when the market was a little wishy-washy, when the market was a little soft, or maybe the market was pulling back a little bit. If you are looking for a stock that is at a 20-day high, it's going to be a lot more meaningful when the market is doing this, because that stock is grinding higher, making new highs. That is relative strength, okay? So today you're going to have a whole lot of stocks that are making a 20-day high. My point is that you have to understand why it would be better for you to search for a 20-day high when the market is pulling back like this, and why you would not really want to use that criteria on a day like today when the market is making a new all-time high. Also understanding what those SMI breaks are. So that's how you do it. This is how you need to view the trade signals. They are not the holy grail. And I'm not looking for a bunch of people to come in like zombies and go, I need to buy when the arrow is green. I need to sell when the arrow is blue. That's not how you should be thinking about these, okay? If I have a system that works that reliably without having to add any other variables or any other influences at all, it's just basically taking and creating my own recipe and my own system within the system, which I do plan on doing for my own personal use. That's what you should be doing for your own personal use. I've given you all of the components that you need to make this work. Some of you are going to do it. Some of you are not going to do it. Some of you are going to wait for someone to drop a holy grail right into your lap that works every time, that you can run your analysis on and your track record and go, here's how many winners, here's how many losers, here's the percentage winner, here's the percentage loser. That's all fine to do, but if I devise something that's going to work extremely well, I hate to break this to you, you'll never see it. I'm not going to give it to you. I'm going to trade it, okay? And I have systems in place that are very effective. You have everything that you need to do this on your own. I'm imploring you to challenge yourself, experiment, think about all the components that you have in front of you, and create your own masterpiece. Change some of the variables around. Try different things. Name these searches so that you know under which market conditions they work. Okay, so if I've got a market that's breaking out to a new all-time high, I'm looking at this, 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 and this. If I've got a market that's currently pulling back, I'm looking at this, 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 and this. So you can have mixes and matches for every type of market condition, and these trade signals are dynamic, so they're going to naturally adjust. Thanks so much for watching, everyone. Please click the subscribe button. I'm going to be having Trade Signal Tuesdays through October. So you've got another 4 or 5 weeks where you'll be able to come in. If you've taken the free trial previously, all you have to do is log into the website. You'll have access to Option Stalker, and you'll be able to try out our new trade signals, see how they work. And if you haven't taken the free trial, this is a great time to do it, because you get the 2-week free trial, and then you could still take advantage of those Trade Signal Tuesdays for a few weeks after that, and you'll be exposed to all the educational content. You'll be able to try Option Stalker Pro and actually see us doing trades live in the chat room. So please take advantage of the 2-week trial as well. I will see you Sunday. New market high. We have a dovish Fed. We have an economy that is still on track, solid growth. This is a pretty good setup on this cup and handle breakout. I would be taking some starter long swing positions, but not adding until I see this tested a little bit, this breakout tested, and then I want to see follow through buying. If I get that, then I can add to those starter swing positions. Thanks so much. We'll see you Sunday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.